Talk to us more about the telecoms sector is Jonathan Chaplin. He's Credit Suisse's Holdings Director of Telecom. John Erlichman here with me as well to talk about the basically smartphone sales and how they've driven some of these earnings for Verizon and others. First off, on earnings, John, just tell me your take on Verizon results. What'd you make of them?
So I think the results overall were good, just not as good as they need to be, given where the stock is trading, in my view. They had good postpaid subscriber additions, just a little bit less than we expected and where I think consensus expectations were. They didn't quite hit the mark that we were looking for in terms of smartphone sales. Obviously, that was impacted by the fact that people were waiting for the new iPhone launch. They didn't quite get the amount of growth in revenue per user that we were looking for. And this is a stock that's trading at a really healthy premium to the market and to the rest of the group at the moment.
Right.
So to justify that valuation, they're in a realm now where they have to sort of consistently beat expectations to keep the stock moving in the right direction. And these results were good. They just fell a little bit short of where people thought they would come in.
And Jonathan, I just want to go through some of those numbers because some of our viewers might not know them right off the bat. But Verizon said it sold 5.6 million total smartphones in the quarter. You're saying that fell short of your estimates, right?
Yeah, and it fell short of their estimates coming into the year. So they said that they would be at 50% smartphone penetration by the end of the year when they set guidance at the beginning of the year. They're at 39% smartphone penetration now at the end of the third quarter. They're clearly not going to hit that 50% mark by the end of the year. Smartphone growth has been very strong for them, just less than expected.
So, Jonathan, why do you think they fell short outside of people waiting, for example, to buy the new iPhone?
Two things. So the people waiting to buy the new iPhone was a big factor for the industry this quarter, both for AT&T and Verizon. Both of them saw a big slowdown in smartphone sales. But apart from that, I think that the iPhone hasn't been the blockbuster device for Verizon that many thought it would be. Going into the year, we thought this would be, potentially a transformative device for Verizon and would really accelerate their smartphone gains, allow them to catch up to AT&T. And AT&T's just done a phenomenal job over the course of the last few quarters, hanging on to subscribers and not losing as many to Verizon as we had thought.
And so how is that going to bode for Sprint, which is going to spend billions of dollars to try to get iPhone customers?
So I guess the way to think about it is they only spend billions of dollars if they get lots of iPhone customers. So it's all of the investment goes into the subsidy that they put into the handset. If they're wildly successful selling lots of iPhones, it's going to have a big negative impact on margins in the near term. But it's an impact that we're happy to take because these are really valuable subscribers longer term. If they don't have as much success selling the iPhone, then it's not going to have the impact on margins. Fortunately, we're not in a realm where they're investing up front, not knowing whether they're going to get the growth or not. They only pay for it if they get the growth.
Jonathan, let's go back to AT&T versus Verizon. Why do you think AT&T has managed to hold on to customers or get more customers that you thought might be going to Verizon? What are they doing to hold on to those customers?
Yeah, so two things. One is that they've put a message out there that their network is faster than Verizon's for the iPhone. And this is a message that I think they're going to push even more heavily as we go into the fourth quarter. And I think to some extent that's resonated. So that stemmed some of the losses that we expected from AT&T to Verizon. The other thing is that they've been selling the 3GS, or rather giving away the 3GS for free, and that's something that Verizon hasn't been able to do. So between those two factors, AT&T's ended up doing a lot better this year than I think anybody expected going into the year.
So then to justify the valuation of Verizon, what does it need to do in order to gain that market share from AT&T then?
It needs to grow revenue at a faster rate than it is at the moment to generate more earnings growth than they're seeing at the moment. So when we look at earnings for next year, consensus is around 254. That's sort of more or less where we are. We're a hair below that. It puts the company at a PE multiple of 14 times. which is a really significant premium to the market. To get enthusiastic about the stock at these levels, I really think you need to see more earnings growth. That 254 number has to march up to put them at a multiple that's more palatable. And it would come from higher than expected smartphone growth, driving higher than expected average revenue per user, and it's just not coming through at the moment.
Okay, Jonathan, we're going to leave it there. Thank you for joining us. Jonathan Chaplin, Credit Suisse Holdings Director of Telecom.